Then there's the Open. How about that ticker, Steinbomber? I mean, 1.9 billion shares. I like almost came out of my seat last night when I was doing my post-market work. I was like, what the is this thing? Holy shit. And it was, like I don't think I've ever seen that many shares trade on a stock that traded, its 90-day average is a lot, 86 million, but not 1.9 billion.
I'll spend maybe 20, 30 seconds here kind of taking a little stroll down memory lane, bringing us up to present. So for those unfamiliar, Opendoor, ticker OPEN, Open, they were basically the pioneer of this so-called iBuying model. This company came public in December of 2020. You may not remember, Keith, but this was a Chamath SPAC.
So that's where she's born.
Yep.
Yeah.
So it got the big halo. It came public at about a $5 billion enterprise value, and then you had quad two. You had a red hot housing market, 2021. You had a zero rate environment. The stock absolutely rocketed from its SPAC price of $10 up to an all-time high of close to $40 by February of 21. So within a matter of a couple months, it quadrupled. At one point, I think the company was worth over $20 billion. And then things didn't go so well. Mortgage rates spiked, of course, in 2022. HPA, home price appreciation, slowed down dramatically. Transaction volumes in residential real estate tanked. Opendoor lost $1.4 billion in 2022 and nearly $1 billion in just the third quarter of 2022 alone. By June of this year, so June of 2025, the stock price had cratered 98%, down to 50 cents. And the company had been warned by NASDAQ that it was going to be delisted. So management / marketing, they cut headcount, they cut inventory. They managed to narrow their Q1 net loss to 85 million, and they guided to a positive contribution margin. So suddenly, you've got this stock that's basically on, death's doorstep. There's 24% short interest, and they come out with, basically some green shoots. Less bad is good, as we like to say. And you got a meme style squeeze set up. And then you get this hedge fund, EMJ Capital, comes out on Twitter and basically touts the stock, saying that it can go from 50 cents to $82 because everything's going to get really good really soon. And Reddit's Wall Street Bets forum basically piled into this thing over the last couple of weeks. So the stock rose about tenfold from 50 cents to an intraday at one point yesterday was around $5. So up, 500%. It triggered multiple trading halts. Even in spite of all that, it's still down 90% from its 2021 peak. The iBuying model still remains basically trash. That's their fundamental business.
And if you're wondering how to become in his own mind, a rich man, I don't define that. Don't confuse yourself with how much money you have. A rich man. Ask Scotty Scheffler what defines a rich man: a father, a husband, an upstanding citizen with integrity, not a pump and dumper for your own financial benefit. Scammer or Chamath, whatever his last name is, you just have to have enough people to believe the bullshit some of the time, right? So that you could sell into them, and then the stock loses 98% of its value, and you're out of the way, and you're still living large, taking pictures topless with your PJ. But this is I would still buy the stock. Having said all that, right? I would buy every damn dip until my signal says there's not higher highs in the risk range. It's the same analysis no matter what ticks. When you look at the relationship rate of change that's embedded in my algo, again, and Open was on my PA buying list before this move. It is, again, the rate of change of volume on this to price is the biggest I've ever seen, right? So it absolutely should have done what it did, even though you, the fundamentalist pig or the hater of Chamath, which I'd be at the top of the list, would say that you wouldn't buy it on that. Well, I would. I'd buy my worst enemy if it was a ticker. So And he's not my worst enemy. He's just a scumbag. So there you go. That's the wrap on Open. I'm sure we'll get some vibes and some waves and everything like that from the meme community on this video, because they don't have much analysis or history on it. They're just chasing.
Thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.